Yo, welcome. Today's August 28th, 2024, and today's video is going to be a trade recap over the three trades that I took today. And yeah, let's get right into it. So, coming into the morning session, I was rather neutral. I didn't know if prices wanted to attack previous day high, but I did note how coming into the morning, we had SMTs here with ES, right? We had SMTs with ES at previous day high, and we kind of traded lower, and we created a 1 hour fair value gap. So that was, what was going through my head was, okay, if we are bearish, right, we should respect this hourly fair value gap. And I do note this at, this is like all live too. If you guys watch my live stream, this is all live, how I pointed it out. But yeah, so I told myself, okay, so either we could respect this hourly fair value gap and continue lower, or will we disrespect this 1 hour fair value gap and attack the SMT high, which was basically the previous day high here. So those were the two scenarios that were going through my head. And on the 4 hour time frame, I do want to note how we are trading within that 4 hour fair value gap here. 4 hour fair value gap and 6 hour fair value gap. So we're still trading inside that those bearish PD arrays. So we're still trading within that 8 hour fair value gap. So on the higher time frame, we are technically still bearish. So whenever we opened up at 10 o'clock, I noticed, okay, well, we just respected this 1 hour fair value gap, right? We held the SMT high, so that's a strong high now, and we displaced lower, attacking previous day low. So that New York AM session, if you guys watched the stream, like I said, I wasn't able to find an entry pattern to be a part of this move lower here. So I had to watch on the sidelines, and I was content with that. So during the lunch session, I told myself, okay, well, this was the terminus for this morning, for me at least, was this hourly fair value gap high. So after we took out previous day low, I noted out, okay, well, we have this hourly fair value gap that hasn't been rebalanced yet, so we could probably rebalance this FEG here. So after we rebalanced that fair value gap, I told myself, okay, well, that's my terminus for the morning. I'm gonna go to the gym, and let's see what happens during this gym during the lunch session. So during the lunch session, we tend to usually get a retracement during the lunch session if we had a really strong move down during the New York AM session. So we had this massive expansion lower, right? So during the lunch session, we had a retracement back inside this hourly FEG here, and we respected the hourly FEG and we continued lower. So the trades I took today were actually a long. I took 2 longs and 1 short. And the very first trade I took this morning was actually right here. Alright, so the trade I took here was I wanted to see prices rebalance this 30-minute fair value gap. So this 30-minute fair value gap, I was anticipating for prices to retrace into that 30-minute fair value gap. And like I said, I don't really care too much after if we respect the fair value gap or will we, displace above the fair value gap. That to me, I don't really care. All I'm targeting is that 30-minute fair value gap's low. However, when I took this entry here, I took this entry based off of the 2-minute time frame, the 2-minute fair value gap. So whenever prices retraces back inside the 2-minute fair value gap at 10:30, I take my entry at 10:32, and I'm targeting that 15-minute high, which is aligned with the 30-minute high as well. My stop loss was here, I believe. And this trade was a break-even trade because on ES, we had already taken out this 15-minute swing high and the 30-minute swing high. And NQ we didn't, so I actually closed this trade for break even, and I think I made like $30 from it. But yeah, I was able to prevent myself from taking a loss because I recognized there was SMT at the highs here. So this high and this high right here, there was SMT. And I was, like I said, I was able to recognize that, and I moved my stops to break even. And yeah, so we actually respected this 15-minute fair value gap, and we just displaced lower from there. So like I said, during that morning session, we kept displacing and displacing, right? So the trade that I did take today during the gym was actually, well, I take 2 trades at the gym today, which is usually uncommon. I don't take trades at the gym, but it was, these setups were actually like pretty clean. So the trade I took today was actually based off of the very second trade, right, was a long. So I took an initial long into the 30-minute fair value gap. That one I had to close at break even because, like I said before, SMT. The second trade here I took was actually based off of how we closed on this 15-minute candle. So the way we closed on this 15-minute candle was telling me that, okay, well, hey, we're probably going to rebalance into this fair value gap right here. And we are probably going to trade back into premium of this price leg. And the reason why I use this as my dealing range here is because this swing high, we traded into a fair value gap and we displaced lower. So that becomes my dealing range from this swing high to this swing low. And I wanted to see prices retrace back to at least equilibrium of the range here. So I wanted prices to retrace back inside that little this blue line right there, which is, like I said before, the premium of the range. So on the lower time frames here, like I said, we are going to look for some sort of entry pattern to long to take out the equilibrium, right? And like I said, the models here are the 30-minute time frame is aligned with the 15-minute time frame. Or actually, I don't think there was actually time frame alignment in this trade. This is, yeah, 12:45. Okay, so now I will go on to the lower time frames to find an entry pattern to long into. Oh wait, actually there was time frame alignment. There was time frame alignment between the 30-minute, the 15-minute, and the hourly time frame actually. Sorry. So there was time frame alignment, and I was targeting that hourly high, this 30-minute high, and this 15-minute high. And the entry pattern I used was this 5-minute fair value gap right here. So this 5-minute fair value gap, this BISI, should be respected if we are going to continue higher. So we actually respected it on the 1-minute time frame here. So I'll show you guys. 10. So 110. So I actually enter my trade here right at 1 actually. So we opened up at 1 here. We opened up at 1, and we dipped lower into that 5-minute fair value gap. I had my stop loss at this 1-minute low, and I'm targeting, like I said, the equilibrium of the price range, of this price range here. And once we tag the equilibrium, I move my stops to break even, and I take off half my contracts. So this trade here, I actually took, I believe it was 18 contracts, and I took off 9 contracts at the equilibrium, and then I moved my stops to break even. And we get stopped out, and then now that's when I started reassessing for another, reassessing again, right? So the third trade I took today was actually in alignment with the higher time frame narrative, right? We are trading lower, and we're coming into a hourly SIBI. This hourly SIBI should be treated as resistance. So longing inside of this hourly fair value gap isn't, I wouldn't recommend it. And the only reason I longed in this sense here is because this hourly closure, this hourly up close, this 30-minute up close, and this 15-minute up close, like I said before, suggested for us to continue higher. So we still had room to continue higher on the hourly in the 30-minute and the 15-minute. But after we tap into the hourly fair value gap, I move my stops to break even. So if we do get a reaction to the hourly fair value gap, I'm basically risk free on that trade already, because I already took some contracts off and I paid myself. So the second trade, like I said before, is we came into this hourly fair value gap, right? We traded inside the equilibrium of this price range, and we had a reaction to it on the 5-minute time frame, and we created a bearish 15-minute closure. So keep in mind, look at this 15-minute candle right here, right? We traded into a 1-hour fair value gap, and we created a bearish 15-minute candle. That is telling me that, okay, we just had a reaction to the hourly fair value gap on the 15-minute time frame. So now I'm going on to the even lower time frames here to find an entry pattern to attack this 15-minute low. So this 15-minute low here is my low-hanging fruit, and is my draw of liquidity for this trade specifically. So on the 5-minute time frame here, here are all the confluences here. Like I said, we traded into premium with the price range. We had a 15-minute power of 3 that was bearish, and we disrespected this 5-minute fair value gap that was a busy. So then now that should be turned into a inversion fair value gap, and we had a market structure shift on the 5-minute time frame. And those are all the confluences for this trade now. So on the 5-minute time frame, we created a 5-minute BISI, or sorry, a 5-minute SIBI that is in confluence with us trading lower. So I take my entry at the 5-minute SIBI, and here's the 1-minute time frame just so you guys can see it a little bit clearer here. So we trade into that 5-minute fair value gap. Let me note it up for you guys. 5M fair value gap. So prices trades back inside the 5-minute fair value gap here. And this trade here actually took quite a while to pan out. But yeah, once we started to get movement, we actually displaced extremely fast. So we respected the consequent encroachment. We never got a 5-minute closure above the consequent encroachment. And this was the 15-minute swing low that I was targeting. So that 15-minute low, like I said, is my draw of liquidity. Prices taps into the 5-minute fair value gap, and I take my entry. It is a 1-to-1 trade, but these types of trades here are, like I said, they're in confluence with the higher time frame. So after we take out the 15-minute swing low, I move my stops to break even, and then I just slowly started peeling off contracts from there. And I think my last TP here was actually at this swing low here. Was this 15-minute low. And yeah, I closed my positions. But the thing is, one thing I could have done better this trade was actually hold it. So I could have had another partial here and another partial here. Because this is a higher time frame model. This is a hourly model. Because like I said before, we traded into a hourly fair value gap, and we had a reaction to it. So if we had a reaction to it, we should, all of this sell side here, all of this sell side here should be treated as low resistance. We should just sweep all of this, take out all of these sell side levels. And that's what we ended up doing. We just took out all of those sell side levels. And yeah, this was a very, very clean trade here. And yeah, that's gonna wrap it up for today's video. I hope you guys found knowledge in this video. I try to do these every day if I do take a trade. And yeah, thank you guys so much for watching, and until next time, peace out. Skadoosh.